Hello, welcome to LCG's look ahead to the key events in markets for the week starting February 20th, 2017. For the Rowena fan club, again, not to worry, she will be back in our week ahead videos in March. Last week, we saw record highs in the UK, US and global stock market indices. The Dow Jones, the FTSE 250 and the MSCI All Country World Index all closed up at record highs on Wednesday. Clearly, there is some short-term overexuberance and indices ticked lower on Thursday and Friday. We said in last week's video that we see no reason to change our bullish bias on the Dow Jones stock index or Wall Street as traded by LCG. That remains generally true, but after closing higher 5 days on the trot, the increased odds of a deeper correction make us a little warier this week. Stock markets in general look pretty positive, but if we were to choose the weakest spot, it would probably be the European benchmarks like the Germany 30 and the France 40. In our market snapshot video from Thursday, I referenced 11,720 as a level where we were watching for signs of a deeper pullback in the Germany 30, and on Friday we got a dip below there. Why could continental Europe be a bit weaker? Basically election risk. There were riots all over France last week, and every day they continue, it improves the anti-immigration candidate Marine Le Pen's poll numbers, leading up to the French election. We also have the Dutch election in less than a month, where the far-right party PVV, led by Geert Wilders, is leading in the polls. Now, it could be a slow start to the week because it's President's Day in the US on Monday, and all US stock and bond markets will be closed. Markets will be open in the rest of the world, but the lower volumes without the US investors typically mean volatility is lower. Still, with Donald Trump as president, this is by no means a guarantee. On the data front, the things to watch will be European PMIs, UK GDP, especially given the slowdown in retail sales and uptick in inflation that was reported last week, and FOMC minutes. The minutes could be slightly redundant since we did hear from Fed Chair Yellen last week, and she runs the show, but we could get an idea if there was any dissent behind the last decision to hold rates steady. Earnings-wise, Tesla, Fitbit and Square are the big potential movers in the US, while most of the big US retailers, including Walmart, also report. In the UK, it's all about the big banks with HSBC, Lloyds, Barclays and RBS all on the dock. Bank stocks have been amongst the best performers recently in hopes of deregulation and higher interest rates in the US, but it remains to be seen if the earnings justify the optimism. That's it from LCG's Week Ahead. Thanks very much for watching and good luck trading this week.